Breaking news as the FOMC meeting is right around the corner and the Federal Reserve just cut interest rates by 25 basis points. Guys, Jerome Powell is about to speak and markets are already reacting. Check this out. Bitcoin's price on the minute time frame plummeting from about $105,000 to $103,600 in a time span of 4 minutes. Lots of volatility coming into the markets right now. Of course, awaiting the speech from Jerome Powell. Is this going to be absolute carnage today? Are we going to be able to rebound? What does this mean for the markets? Well, guys, we're going to find out together. We are now only 5 minutes away from the Federal Reserve's speech here. So make sure you guys hit that like button and share the stream because this is, in fact, the most important FOMC meeting and decision to date. They could come out and say they're going to shift policy because inflation's remaining stickier. We have no idea, but markets do expect right now the 25 basis points. This was priced in. If you guys go to Fed Watch tool, you can see that there was a 99% chance we were going to get that 25 basis point rate cut. And that's exactly what we saw today, guys. So yes, right now, Bitcoin is dumping. What looks like we're going to be opening up some potential opportunity. The only project pumping right now is Ondo. It did drop a little bit here, went back up to $2 just a few moments ago. So, screw you, Jerome Powell. We want to see that pump back up. But Ondo still at $1.48 in the green, as you can see on the sidebar here. Now finally turned red. XRP down 4%. Link down a few percent as well here. Bloodbath. An absolute bloodbath on the charts, guys. But this was to be expected. So potential accumulation zone. Potentially we're going to be opening up and buying a few bags of crypto here today. Might open up actually even a few trades. But again, we're now only 4 minutes and 20 seconds, 4:20 blazing, away from Fed Chair Jerome Powell speaking, guys. Hopefully everybody's doing well, guys. As you guys come in, again, hit that like button. But we got Crypto Tim. Welcome in. Borns with the absolute carnage. Sell the rumor, sell the news, sell it all. Games are being played always. Fed does exactly as expected. Yes, we're awaiting really kind of the next conversation is, are they going to change their approach to the rate cuts moving in 2025 here? That is the question everybody is waiting on. So, Bitcoin needs to hold here. If not, it's going to get very, very, very ugly, guys. Maybe you see back below $100,000 again in the next 24 hours. DXY pumping crazy, the chart. Oh my God. Dude, the dollar is absolutely ripping right now. Wow. Look at that dollar here, guys. Little double bottom action. And yes, guys, as the dollar pumps, Bitcoin does in facto dump. So makes sense on why the markets are bleeding here. Looking at the SPX, the Dow Jones, everything is down. Look at the SPX, guys, here. This is the hourly time frame. Just an absolute bloodbath across the charts. But we're a few moments away from this, guys. We're a few moments away from this. I'm not scared at all of this. I think this is going to end up being one of the best buying opportunities that you can have in the coming month. In fact, the date I'm going to be really watching is the Federal Reserve, or not the Federal Reserve, the inauguration from Donald Trump. That is the most important day right now. It's good to be here with the smartest people in crypto. Shout out to Jeremiah Dixon here. 4% is not a bloodbath to Webb. Oh, it's not necessarily a bloodbath, man, but it is a buying opportunity here. Looking at a few projects here. Someone goes Velodrome up 26% today. Is Velo pumping again today? Velo needs to chill, man. Velo is up again to 22 cents. You guys know I sold at 33 cents at that exact top. Beautiful play here. Rolled it over into some more Ondo. Bought some Arkham. I wish I waited 2 days to buy Arkham. I do, in fact, wish that I could have gotten a little bit of a better entry here. But still excited for this play as well. We have a full breakdown on why I'm picking that up and why I put a massive bag into it. In terms of the last hourly, though, guys, biggest lures, Aerodrome, Athena, Ondo, down 1.68% here. And yes, guys, Federal Reserve, or Jerome Powell, let's actually just type in FOMC meeting live. Let's go to Bloomberg's up here. Live coverage. Nope, we're going to just wait. We got a few moments left here for Bazinga. Few moments left here. But yes, guys, we got the 25 basis point rate cuts, and charts are all over the place. $103,500. Now, the target I really want to pay attention to again is going to be what we covered earlier on this morning show. And this is also something to pay attention to, guys. Look at this rejection period we had. $107,000 is going to be incredibly hard to break. I mean, the resistance at that zone is pretty massive. And let me go ahead and go to, we want array. Boom. Actually, it goes back, I think, all the way down here. You can go back to look at that. Holy smokes, guys. Yeah, we came right up to that resistance here, literally up to it and tapped it. So it was kind of an obvious top signal here, at least in terms of a resistance point. But when you really zoom out, yeah, it's really not a bloodbath, guys. I mean, this is your, like, oh no, wow, holy smokes, we're crashing. Not really, dude. Bitcoin's not even down 5% off this news here. So it could just be a cool down period till that next break higher. But again, I think everybody's expecting a pump here into 2021, at least a pump up to Donald Trump's inauguration there. Look at that. Ondo getting a nice bounce right now. Dude, who holds on? Type 1 in chat if you hold Ondo. My God, Ondo condos all over, guys. Look at that. Look at that rebound right there off Ondo condo, my man. Filled this liquidity position. We have a little bit of liquidity, 27 at 1049. Central music is starting 2:30 p.m. Now 15 minutes away. Oh, starting in 15 minutes. They're just live early here. FOMO.io goes to show. Look at this. We probably just grabbed through all that liquidity. Liquidity now open up to 105 here. 105. Yes, liquidity all the way up now to $110,000. Absolutely. Look at all the ones in chat. You guys are smartest crypto channel on the planet, dude. I swear, man. F wish I would have waited on Arkham as well. Yeah, I mean, it is what it is, man. That's just a spot buy and hold. Spot buy and hold, baby. I'm looking for a $4 price point on that previous all-time highs. To me, it's just an easy play there. That is just parking the cash. Parking the cash, man. That's all we're doing. My largest bag is Ondo. My God, Mario. I'm not even mad about that. Convinced Hosky will make me rich. Getting rich off the Cardano plays here. What are your top holdings, guys? Let me know what your top holdings are in chat. Only top holdings. Don't give me your favorite altcoin. Tell me what your top holding is. Okay. Mine is obviously Bitcoin, but Ondo is slowly moving up into its second or third position. I hold big ones, obviously Bitcoin, but Ethereum and Chainlink. Those follow it pretty close here. Link, Ondo, and Sui. That's 3. Someone goes, Ondo is my top. Dude, lots of Ondo tops here. Moonwell. Yes, Moonwell is another beautiful play there. Another beautiful position there. Also, shout out to my Morph holders. Got in a little early on this bad boy, but Morpho touched $3.05 today. Up almost 3x. You know, that's over. It's like a 250% gain. Shout out to anybody that picked up that. Absolutely beautiful. Ada and Ondo tied. Whew. I think we know what's going to be the leader off that, my man. I think we know what's going to be the leader here. But let's go over to Twitter, right? So, breaking news: Federal Reserve cuts interest rates by 25 basis points. Guys, if you don't follow me on Twitter, you're missing out on all the alpha here. You can see everybody's literally tweeting out the same exact thing here. No bills. Let's scroll down here. What is this here? World Liberty Financial just partnered with Athena, which is one of the 4 altcoins they hold: Link, Ina, Aave, and Ondo. Worldwide Liberty Financial here partnered with Link on November 4th. They've now partnered with Ina. Are they to partner with Ondo Finance? The pillars are falling, guys. Might be a huge, huge, huge bullish move here. Canada responds with $1.3 billion border. That's so funny, dude. I swear Trump wants to turn Canada into the 51st state, dude. He's always trolling them, man. Guys, check this out, though. 4 hours ago, the massive $1.5 trillion bank builds L2 blockchain on Ethereum. Massive, dude, guys. Massive. Looks like everybody is bullish on the 25 basis points, though, here. NVL and Cardano is my biggest holding. Massive, man. Massive. No, guys, you have not been anything. We are now 10 minutes away from Federal Reserve Jerome Powell's speech here, which is the most important speech right now you guys need to be watching here. So we're going to be watching it live together and going through the charts. Might open up some live trades here with you guys. I know we're live a little bit earlier, but we wanted to cover this live stream here. Bitcoin now sitting at $103,400 here. Someone goes, Quant is my top holding. Interesting, man. Interesting. I do like Quant, but is top holding? Bro's got some conviction here. Bro's got some massive conviction. Congress proposed 40% pay raise. Disaster relief. Really big things. Let's head over to FOMO.news here. Federal Reserve cuts interest rate by 25 points. Polygon faces proposal pushback in Aave fallout. Man, dude, Polygon, guys, Polygon is just taking pretty hits, man. Pretty big hits. Absolutely ridiculous. Like, they need to get their shit together, man. They really do. 200,000 Bitcoin price target to look quant. Wow. $200,000 Bitcoin price target to look quaint. If the U.S. government launches Bitcoin Reserve. Absolutely true here. And yeah, guys, looks like we're all on the sidelines here waiting for Jerome Powell's speech here. SPX now down to 600 points. Of course, that SP 100, guys, we're following this right now with Bitcoin. Following it to, oh my God, look at the NASDAQ 100, dude. Just a bloodbath on the NASDAQ 100. Bloodbath, dude. Bad time to take hits. Yeah, you never trade, guys. I love never trade FOMC meeting. Like, it's insanely volatile. Especially with a bullish, like 25 basis point rate cut is supposed to be bullish, right? So usually you get windshield wipers like this, dude. Market uncertainty, big sell orders, look at all the sell volume coming in. What you'll want to see is over the next 15 minutes, that sell volume die down, right? And then we're going to look to catch that reversal back up. But yeah, I don't think anybody thinks this market's over right now at all. Aave killed Matic, potentially. $2 super chat coming from K Smithy here. We got, can you take a look at TEMA chart? Bullish. I've never heard of TEMA. TEMA USD here. Bitmart. That's the wrong one. TEMA USDT for you. Yeah, this thing has little to no liquidity, bro. Is this bullish? Oh, this thing is this a meme coin, bro? It's literally, there's no data to even chart that, my man. No data to even chart that. You're dealing with like not even a month of data, and it's just up only, man. So that's just high risk. That is entirely up to you. That is a high risk play there. Quick sell coming on Vara. Vara here. Vara USD. Are you shorting or longing there, man? I would say the products I'm watching for, Chainlink here. Chainlink could be a decent opportunity at 26.16. Ethereum, obviously Ethereum. Ondo's like, just Ondo's Ondo, man. Just does its own thing. Render here, bouncing off that trend line as we showed you guys this morning. Huge accumulation area. Definitely want to follow that as well. What do you think about Quant? Quant is a decent play, man. It's a SaaS model. It's centralized as hell, but it's a decent play in terms of, Gilbert Verdi. It's crushing, man. They have great financial messaging connections with the. He developed like, what is it? TC3107, T3107. I'm forgetting the standard he developed, but as a SaaS model, there is a lot of potential. My biggest worry on Quant is they don't know how to market to retail. Which some people are going to be like, oh, they're an internet. But it's like, dude, do not leave. I do not like that Quant left Twitter. That's all I'm saying. I like Quant as a project. I don't like that they left Twitter. I think that's just stupid. I think that was stupid here. Looks like we are finding support at this range here, though. So this is good to see on FOMO's dashboard. Again, you got liquidity down to 102. Liquidity around 102. But look at this. Look at that, guys. You guys can see the liquidity here. Actually, let's go zoom in, and here you go. There you go. Look at that. So bouncing right now. Liquidity up to 105,670. 105,670. So we could be finding support here, but you want to make sure that we don't get a liquidity gap down. So what you guys should be focusing on right now is really Jerome Powell. You just don't want to trade this. It's going to be very volatile. It's going to be like ping, 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 ping. But we do have a massive imbalance here of 27.8 imbalance on the footnotes here, which just goes to show we more than likely will end at a 105. 105K here by the end of the stream. Love you, man. Love you, bro. Bitcoin is up 43K in just 2 months. People quit crying. No, dude, I want to go up only to the right, man. Win $1 million Bitcoin. Come on, Webb. Win $1 million Bitcoin, dude. Are you bullish on Jupiter? Most government success project with massive. Are we bullish on Jupiter? Hell yeah, we're bullish on Jupiter. Jupiter, we called and traded. We traded this beautifully in the Telegram. We traded here, we traded this, we traded this, we traded this. Buy, sell, buy, sell, buy, sell. We literally crushed it with Jupiter trades, called the breakout, retested, called the play. And yes, man, our Jupiter bags are full, man. Couldn't have gotten a better possible entry point than Discover Crypto here, guys. So make sure you guys are subscribed to that channel and in our Telegram chat, man. One of our favorite plays for sure by far in the Telegram chat here. Let me check what we got out coming from the Telegram here, though. Breaking the media dot in the new 2025 Federal Reserve dot plan moved 0.5% higher to 3.875 cents. Just 2 FOMC penciled in rate below at 3.5. I don't think markets will like it that much. Maybe that is what we're getting a little bit of a disaster here. We're going down is what some people are saying. Again, I'd be very cautious on betting downside in these markets. I really will. I really, really would. I think you're going to see a lot of bullishness moving into Q1. I would say the target range here. Whoa. Our target, guys, take profits before inauguration. Take profits before inauguration. If you're up massively, guys, this is what I'm going to show you guys right now. Here's your ultimate play, okay? Ultimate strategy here. Okay, we are obviously dealing with major resistance at 107, okay? So if we break out of this, go up to like 120, right? If we get this in the next month, take profits here, right? I'm going to expect a pretty solid retest of this trend line, okay? I'm going to expect a pretty solid retest of that trend line. So if we break out to the upside, I'm going to expect a retest of this trend line before we move higher. So you could very well, right? This is our bull case. This is our bull case. From here today, we can get a 16% pump or so on Bitcoin over the next month, followed by, let's say 120, right? Followed by at least a 10% correction. Okay. So a lot of you in altcoins are going to see 10, 20, 30, 40% gains, right? You're going to see a pretty decent amount of volume go into your altcoins. You're going to see Bitcoin dominance remain higher, which is struggling right now, right? But if we do get that, personally, I'm taking profits on that next leg up because I'm going to expect a pretty significant pullback. Personally, it's personally what I'm doing here. But we'll be up so much money. Who really fucking cares, right? Most of you got in, like literally guys, we're making so much money this cycle. We've just made so much money, man. Waiting for you to clear my request in the group. Did you sign up for CoinW? Guys, as soon as you sign up for CoinW and deposit, it automatically lets you into the group. Just so you know. But I got you, Yevra. I got you, man. Make sure you just sign up for it. Top is coming end of Q1, beginning of Q2, potentially. Potentially, man. CoinGlass showing whales loading up. Whales absolutely loading up, man. Guys, whales have been buying all between the $90,000 to $100,000 range. So I'm not stressed at all here. Going to the news side of this, we can go to our latest news. 2 cryptocurrencies to reach $10 billion market cap. Let's see what we got here. Let's go to Finbold here. Always with the ads, man. ChatGPT says Hedera will hit target by December 31st. No, that's kind of lame, dude. Who cares? Who cares on that? Cardano Wells capitalize on ADA, scoop up 160 million tokens. Charles Hoskinson plans to move Cardano Foundation to Abu Dhabi or Wyoming. Those are 2 very different places on the planet. I love Abu Dhabi, though. Lots of opportunity there. Ohio joins growing trend of states. Yes, we've covered all of this, guys. We've covered all this here. 2:30, guys. We're 3 minutes away. 3 minutes away, guys. Hit that like button. Share the stream with a friend. Give it to your family members. We're going to be watching and analyzing these markets in real time and giving you guys a full-blown update on what it means for the markets. Of course, after we get Jerome Powell's thoughts on the markets, because that's really all we're waiting on, man. That is all we're waiting on here. We can actually even look through here. Let's see what we got. Some analysts here. The Federal Reserve reduced interest rates by 0.25 percentage point Wednesday and scaled back the number of cuts it expects to make next year. In a split vote, the central bank voted to reduce its benchmark interest rate by 25 basis points to a new range of 4.25 to 4.5%, initiating its 3rd consecutive rate cut of 2024, despite signs that inflation isn't entirely going away. Shout out to Joe Biden. Newly appointed Cleveland Fed President Ben Hammock objected, preferring not to cut rates. Her dissent marked the 2nd or dissent marked the second against policy decision making the Fed started in its latest rate cutting cycle in September. 10 officials estimated 2 cuts next year, and 3 saw 2 cuts next year. 3 saw 4, and no one saw no cuts. So cuts are coming, guys. It just depends how many. Just depends how many. How high can Bitcoin or Bybit push MNT? No, do not know, man. I do hold some MNT though. Is MNT pumping today? Oh, that's Mantle. Wrong MNT. I'm not thinking of Mantle. Potentially forming a massive cup and handle. So I'd let it find support, but could be a be ready to break out. But $4 billion market cap, man. Already massive project here. Already an absolute massive monster, dude. It is a monster. Let's go to the minute chart here. Here's your minute chart. Look how ugly this is, guys. It's absolutely beautiful. It's like Christmas came early. What should I leverage trade right now? You should not ever leverage trade during an FOMC meeting. It's like rule number 1. Any major economic event, you don't want to trade. After selling your alts next Q3, Q4, what would you rather invest into? Real estate, earning interest on stable coins? It entirely depends, Dot. I might be selling some Q1. I might be selling some next month. I might be selling some, throughout. But obviously, real estate's for sure an answer. But probably just honestly, dude, high yield dividend stocks. The VU, the VIM, like that's where I'd be, looking to perform. I mean, if you want lower risk, it's make sure you're, just allocating to these. So like, look at this, right? Go to the daily and zoom out, right? So lot lower risk here, and you're earning dividend yields off this. So if I can get $1 million, $2 million into these dividend stocks, you're looking at anywhere from $3,000 to $5,000 a month, just in residual income. So my goal is to take the higher risk plays, move it into lower risk plays, and have multiple different residuals taking place from multiple different sectors of the market. So personally, I would like to sell my altcoins, be massively cash heavy, wait for a 30% reduction, right? Like right here, get a 10% reduction. But here we go. We'll talk about that in just a moment. Hell no. We're gonna do this one. Hello? You guys have audio? Do you have audio? Still no sound. Let me present, share screen. Nope, it had sound. That was weird. Yeah, I knew it was weird. There's a weird audio buff there. There you go.
Suggested economic activity has
There you go.
Good afternoon.
He's quiet.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8%, and the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak,
is staring.
and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today, and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut. And I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that.
It's max volume,
show
guys.
A much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just the general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected. and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people. The way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down. And so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially.
I hit the like button.
The only thing really that's happened, you mentioned that the
Twitter,
disinflationary story remains intact. Yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation, September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation to as I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways
Bitcoin
on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Dude, markets hate Powell right now.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal book discussed a policy of looking through.
That was major
resistance. As long
resistance.
as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point. And I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And, there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then name some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding again the ways in which tariff-driven inflation can affect tariffs can affect inflation in the economy and how to think about that. So we've done a good bit of work. All of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow, given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen the past
I do
few
not
years?
like tariffs,
So
guys.
the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well,
ETH, alts are dumping.
I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers.
So for anybody that
yeah.
doesn't know what's happening, is markets hate uncertainty, and there was a based off the Fed plot, it means that their inflation targets were wrong and that we're going to remain higher for longer.
That'd be significant progress. You see a slower path. I think that
Bless
does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but it would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And, I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is, most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence, or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates. And, we look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. You do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought, 2 years ago. But it's nonetheless steadily coming down as market rents, start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. A good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to, to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on. And, our policy will do everything it can to assure that that is the case.
Colby.
A good joke, Wooden.
Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might, if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think you pointed out participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation is moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are we think are roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard, as is to look. Oh, those high months are wrong.
We
Look
are
at the low months. You know,
dumping,
we
chat.
have a very low
Oh,
month
yeah.
potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course, that's part of what we do. But, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of just take the last year, we've seen inflation over the last couple of years come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. A lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
Okay.
So,
Shit. Oh, shit.
We're not allowed to own Bitcoin.
Oh,
The
shit,
Federal
chat.
Reserve says what we can own, and we're not looking for.
Where the
a law
fuck did that
change.
come from?
That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story: is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continues struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about 0.5% rather recently. The question, I guess, is, do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so. No, I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high, wages are at a healthy and ever more sustainable level. wage growth. And so the labor market, this is a good labor market, and we want to keep it that way.
Thanks.
Amira.
Cause I'm free.
Thank you, Amara Mokway from Bloomberg News. I just
Free
want to put a finer point on the
falling.
labor market. Can you keep the labor market this way in the strong position that you have described without further cuts? In other words, do you still view the labor market as needing support to protect against the further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates. And we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because if the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals. And, we pay close attention to it, and it's worth noting that it is still gradually cooling, and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that. And it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices. And that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning, big real wage increases, so that their wages are going up, their compensation is going up faster than inflation year upon year upon year. And that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What percent do you see, and the committee believes, where is that neutral rate?
So I'll say a couple of things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance and we're looking at the way it's hitting the economy. And particularly, we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting, but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously. Now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policy is still meaningfully restrictive.
Victoria. Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the goal overall is headline inflation because that's what people experience. People don't experience core inflation; they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down, but headline potentially ticking up?
So headline can be affected. You're talking about next year.
Mm-hmm.
Yeah. So headline can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. That's why the two can go in different directions. Headline has been lower as you know, most of this year. That's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy
So
prices?
we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really. Nothing has come out of those risks that really has been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly. Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't react to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation. And it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now. And we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up, let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, it's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now. We're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but
guys, do me a favor, hit the like button, repost if you're on Twitter, but smash that like, guys. There's 1,800 people watching. You guys can easily hit 1,000 likes right now, guys. Tap that like button for being live right now.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways, appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
Bring in that elevator music, baby. All right, wow, guys. Lots to digest from that here today. If you guys are just tuning in again, make sure you guys smash that like button. If you're on Twitter, hit that like button, hit that repost button. Do it all here for you guys. I might be opening a trade here live, though. We're waiting for some resistance levels. I'm looking through FOMO.io right now in terms of liquidity grabs. On the 12-hour, we have just eaten through most of it. So it looks like we could be getting a pretty easy upswing here. But my target would be, I would like to see it come down to like the low hundreds. Like, again, you got a pretty big liquidity gap here, as you can see down here. And if we go to all exchanges, actually, let's pull up all exchanges. That's going to be a little bit more important here. I would like to see a swing to downside one last time before I do so. It is FOMC day, so you don't want to usually trade this. But we are watching quite the liquidity swing here, and looking on that little daily trade here, definitely more bullish to the upside. So I would like to grab around $100,000. That's a majority, like 98. Wow, some decent liquidity here, but we're starting to stack up a short squeeze. So really, I want to see one last swing to the south, one last swing to the downside. But we have that massive imbalance now at 104,000. There's a massive imbalance. That thing's fucking huge, dude. So definitely want to watch that out, as that's going to be a target, 104.9. Got it above us as well now. So if we can get one more swing down, huge buy order coming in as well at 100,000. There's going to be some decent support at that range. Look to grab a nice little scalper. Might be able to get a nice little scalper here by the end of the day here. By the end of the day. But definitely getting some bled. So if you guys didn't know, and you're coming in, essentially markets are concerned with the uncertainty coming out of the Federal Reserve. The Feds are saying they don't know how Trump's going to impact markets. They don't know how tariffs are going to impact markets. They don't know how their interest rates are going to impact markets. They don't know how anything's going to happen. They don't know what they're doing. They were wrong. They got it wrong. They're trying to say they have a target of 2% inflation, which is bullshit. They're not going to hit a target of 2%. I think they're going to land high 2%. If not, they're going to readjust and act like 3% is the new 2%. There's a lot of bears on Twitter right now. A lot of bears in the chat right now, guys. Let me know, guys. Let me know in the comments. Are you bearish or bullish? Are you bearish or are you bullish? Are you bearish or are you bullish? Let me know which one you are here. But we have I am Baron goes. JJ, did they talk about mortgage rates? They did. Mortgage rates are still at a worse pace. People are expecting a housing recession. My guess is you get, again, my biggest guess here, okay? The most likely outcome, in my opinion, is they're going to try to elevate markets as much as possible up until the Trump inauguration, and then you're going to get a pretty drastic sell-off after Trump comes into office, right? You might have a month to 2 month sideways action or downside action. Very, very, very possible, right? Because of all of the unknown certainty, the uncertainty coming into the tariffs, and the uncertainty coming into his policies, the uncertainty coming to the government cuts. Those are big three, the big three. The one thing you can know and all everybody can agree with is markets hate uncertainty. So I am not bearish yet. Obviously, markets are reacting pretty negatively here today. But I'm not going to be bearish until around Trump's inauguration. Personally. Long-term bull, but the cycle is done. Someone said the cycle is done. That's wild, man. That's wild. I don't think the cycle's done at all. I think we're going to have one more tick up and then a downside, but it could be wrong. Could be wrong here. We have made a lot of money this cycle. They knew about this Sunday night when they pumped it up on low. Yeah. End of year pumping coming potentially. Dems final hurrah. Don't be bearish. Oh my gosh. Yeah, I am not bearish. Someone said Trump's already priced in. I completely disagree. I agree with you. So, well, that's, did you just counter yourself? I don't know. Yeah, I agree. Inauguration might be a sell-off, but I'm not bearish on a Trump administration at all. like at all. Like I think that the cuts and everything are going to be very bullish. The deregulation is going to be very bullish. I think what you're going to see is, watch this, right? Let me zoom out. I'm just going to show you guys. Right? I think we're going to have something similar to this cycle, right? So potentially a run up to the inauguration, right? Potentially a run up to the inauguration, followed by a sell off and to another run later that year, right? I think that is a very, very possible outcome here on this market condition. Again, if you're looking historically, I want to point out one thing on Bitcoin's price too. What you'll notice is last cycle, we tagged this resistance level 3 times. 1, 2, 3, technically even 4 times, right? Huge resistance. We've only tested it once right now. So I wouldn't be, again, look at the volume, right? Lots of bull volume coming into you, a lot of buying pressure at this range. I do expect us to test this, if not even break out. We could even see this where we break out, right? We get one more leg up and then we come back down, right? And then we consolidate or we break down, who fucking knows? But I'm expecting some sideways action or some action to that extent. I think it's incredibly risky to turn bearish right now on the markets. I think the people that are calling for a recession are the same people that were calling for a recession in 2021, 2022, 2023, and 2024. They never got the recession. So they're recession clowns, right? Like a recession, like there's the problem is, guys, someone says it right here. Alex says, love these doom and gloomers. There's always going to be doom and gloomers. Like type 1 in chat. If, you guys heard someone say that, type 1 in chat if you remember people saying Bitcoin was going to go to like 3K, right? Type 1 in chat if you remember people saying that we're going to enter the greatest recession or depression since the history of our markets, right? The US dollar was going to collapse, right? Type 1 in chat if you heard those doom and gloomers. For me, what the Dems want to do is Joe Biden and Kamala Harris have been the worst president and vice presidential candidates in history. They're absolute garbage. From an economic perspective, it's all artificially propped up in a lie. They are all for the middle class is what they said, but meanwhile, they're literally just enriching themselves and oligarchs and foreign leaders. Like that's what's happening in Ukraine. We'll digress from the conversation. But so my biggest guess is to get that off their backs because Democrats lost by a landslide. Everybody knows this. They're going to do everything in their power to, of course, delay the, pullback here until Trump's admin. I don't believe markets are going to like Trump's switch. I just don't. I think the uncertainty of the tariffs, okay, here we go. We're going to ask another question here, but put a 3 in chat. So I know you guys are answering the right question. Put 3 in chat, right? Put 3 in chat. If you guys have no idea if tariffs are going to be good or bad for inflation, right? The number one argument right now on a macro level between all of your economists is whether or not tariffs are good or bad for the markets. They're saying tariffs are bad. Tariffs are going to cause inflation. Then there's a bunch of other people saying, no, tariffs are good. We don't need taxes, right? And it's just this battle and this clash. And you heard it in the meeting today with Jerome Powell. They have no idea what the 16th to 18th outlook is. You heard him say it. They have no idea what the impact of tariffs are going to be. So there's a mass amount of uncertainty that comes with this new leadership. And once those policies are in place, we will then be able to analyze whether or not they're going to be detrimental to the markets or not, right? It's that simple. This isn't, you don't need a college degree for this. You don't need, 40 years of experience of this. It's just simple. It is simply uncertainty. That is all these markets are worried about. So, the second thing here is for the people calling for a bear market, I would like to remind you that this is Bitcoin's price action, okay? This is Bitcoin's price. We pull back 4%, and all you doom and gloomers come out and are screaming for the hills. If you can't deal with a little 4 or 5% pullback, you can't deal with the crypto market. You just can't. You don't deserve that opportunity. So that's kind of where I stand with it. I just want to hodl to zero. All coins are going to pump hard after Trump's in office. I don't necessarily know. I think there's going to be a buy the rumor, sell the news event. Usually it's buy the rumor, sell the news. I'm not saying the bull market's over at all after inauguration, guys. I'm not. I'm just saying there's a level of uncertainty that comes with how much government cleanup are they doing? What are the tariffs they're putting into place? And what are his first 100-day policies, right? You saw it with Javier Milei in Argentina. A lot of uncertainty, crashed their markets, followed by the biggest economic boom in history. It's Trump will use tariffs as a negotiating tool. I agree, but many disagree, right? That's where a lot of the uncertainty comes in. We just pulled back 5% on 30 minutes. Yeah, that's completely normal, man. I mean, last week we collapsed by like 10% in the time span of like 10 minutes. Remember that? That was crazy. That was crazy. So, yeah, I mean, pretty easy here. Let's see if we can get this scalp, though. I think there's going to be a pretty decent trade opportunity here. I would like to see it dump one last time, and I want to catch a little swing here with you guys live. I think it's very possible. Or higher taxes, inflation, Trump tariffing Bitcoin to 200K possible. If you don't actually do anything, you don't deserve tax money. Does it make sense to hodl until the end of 2025, or would you sell? It doesn't make sense to hodl at all if your goal is to make money. The only thing I would be hodling is Bitcoin. Hodling is how do you make money in crypto, guys? You have to take profit. You have to, right? It's why bears never make money. It's because they're never in profit, right? Bears are just losers, man. Like anybody that has bear in their name or was a bear and they're just, I don't know what's wrong with them. I don't know, crawled up their ass, dude. They're just losers. It's as simple as that. But bulls are sometimes stupid because look, I'm a bull. I'm a perma bull on Bitcoin. But at the end of the day, you have to make money. And the only way you make money is by taking profit. So it shouldn't be, should I hodl till the end of 2025? The question shouldn't be, should I hodl till 2026 or till 2026? It should be, what are your financial goals, right? If you're holding an altcoin that does a 10x and that makes you $1,000, is that $1,000 going to pay off your car payment? It's going to pay off your student loan? Is that going to pay off your medical debt? Right? Every single person watching this stream is in a different point in their life. You're a different age and you have different debts and you have different goals, right? So all I would say to that is it's a great question, but the question should be, what are your goals? And it's, if you meet those goals, you take profits along the way. If you want to make money, you got to take profits, guys, right? There's going to be a point in the market's history where you have to sell and take profits. That's the definition of making money, right? Markets are overreacting. I believe so, potentially as well. What I'm waiting for right here, guys, is I want to see this volume die down. We got a lot of selling pressure coming in at these levels. So I'd like to see the volume trickle down, a nice green little volume stick, and then I enter in. So I'm hoping to see that at around $100,000, $100,000 Bitcoin right now. Maybe we can grab a good scalp. We'll see if a good scalp opens up here. My goal is to buy gas on the way home from my 9 to 5. Nice. There you go. Need excuses to go back and grab that liquidity and prove 100K in support. Also possible. Yes. Yeah. I do like seeing the open imbalance here at $104,000. But you guys saw last week, right? Like it wouldn't shock us if we went to 95K and grabbed liquidity, right? Going to FOMO.io. I love this platform. This lets us just stare at it and look at this. Ready? There you go. Let me zoom in here. Let's refresh it here. Ondo for a new condo? Hell yeah, baby. What is Ondo at right now? Actually, Ondo's probably a good $190. Ondo's just honestly kind of chilling, to be fair. It's not getting hit like the rest of the altcoins. Every other altcoin's kind of getting smacked right now. Look at this, dude. Arkham, $175 here. Damn, went down to $163. Oh my God. Did it retest that again? Damn, dude. Damn, that would have been a good entry. Good entry. Render here, getting plowed 6%. Aerodrome getting plowed 7%. Dude, these are opportunities. Look at Pepe down 10%, dude. Yeah, there's some good entries here. There's going to be some good entries coming up, guys. Maybe get some good entries here. Let's go back to that, though. That loaded. So, yeah, here you go. Let's zoom in. Let's see our points here. So, we're looking at 101, 100. Yeah, personally, I would like to grab this huge liquidity zone. And if we can grab that and open up new forms of liquidity, I'll enter a scalp long here. That is what I'm looking for right now. I'm going to guess on the 12-hour time frame. Yeah, so you got a lot of liquidity open up above, but 105.7. There's enough at $105,000 or $100,500. There is some liquidity there for you. There is some liquidity there. So we do want to be cautious on that level right now. And that's where I'd probably look to enter this position. So we'll see if it plays out here in the next few moments. It does look like it's coming to happen. It does look like it's about to happen. I think Bitcoin's about to lose the support. We get a flash wick to maybe even the high 99s. We enter just low leverage. We'll go in at like a 5x position here. 5x position because we're moving at, let's see what these percentages are, right? Like that's 2%, 10%. We'll do a 7x. We'll go for 7x here if we get that drawdown. But I want to see that drawdown first. And then our first target will be your first target here, guys. If we can catch that support here, right? We got order flow coming in, but I would expect a wick through it. Would be the 102,650, right? And as that takes place, you want to pay attention to FOMO.io. You want to refresh it and make sure there's not new liquidity targets opening up underneath us. If there's new liquidity targets opening up beneath us, it means more or less you want to target that first liquidity zone. It's going to be very hard to approach the second one. But again, you have liquidity, heavy liquidity now up to 104,130. It's as simple as that. And then, of course, on Binance, you could see your liquidation levels. So if we come down to $100,000 right now, we're going to pretty much eat all of the shorts or all the bulls, all the longs on the market. And then it's going to be, it can set us up for a decent short squeeze there of the overreaction to the Fed decisions here. Simple as that. Simple as that. S&P 500 absolutely plummeting here. Still ramping up. You want to see this, catch some support here. We need to see some buying pressure come in. We need the sell volume to, stagnate. We'll see. Man, this is a bled bath out there, guys. Bled bath out there. Bitcoin's going to follow suit. So here's your 108. Ondo is going. Ondo, yeah, it went back up. It's just following Bitcoin right now. The rebound will be hard. So if it gets a nice rebound, your altcoins will be back up, guys. Like it'll just jump right back up. But we want to see the sell-off. So this is what I like to see, right? You want to watch the volume. You want to watch the sell volume dwindle. You want to see the sell volume dwindle. And again, let's pull up this here. Stochastic now on the minute time frame overextended, right? I would like to see the MACD come down a little bit more, a couple more minutes here. RSI overextended. We would like to see this right here. I would like to see an oversold position there. But 3 minutes still room to come down. Yeah, it looks like we're gonna touch under 100K right now. We're probably gonna touch under 100K right now. 15-minute. This is beautiful. I like to see it. We're starting to be extremely overextended. MACD maybe a little bit more. One more candlestick. We could be getting a perfect entry here. And again, if you open up a position though here, guys, don't be stupid. Have a stop loss on. Pretty simple as that. There you go. Don't be stupid. Have a stop loss on. Oh my God, look at that 200 moving average on the hourly. The 200 hourly average just lost. Oh my God, dude, that is a red dildo. I can't even whistle right now, dude. My lips are so dry. I need that water. All right, there's 105. So there's our first target here. Now, I'm not sold yet. There's still a lot of selling pressure coming in. Lots of selling pressure coming in. So I'm not convinced that this is a good entry point yet. I'm not convinced at all, right? Lots of selling pressure coming in. I think we're going to definitely fill this order book here at 100,000. Let me refresh this. All right, so we just look at that. You saw it in real time, right? So we just ate that liquidity level. Again, I would like to see, there's a lot of high leverage positions opening up right here. I would like to see us eat that. What we want to see is a short squeeze. So right now, the red side is higher than the green side on the shorter time frame. I'd like to see the green start creating a cliff and a flat line on the red. That's the next step here. That is the next step here. So I definitely want to see a flash wick. I want to see a big old sell order take place right now. And that's where I'll look to grab it. Bull run is over, everyone. Sell your crypto immediately. My God, dude. I told you 96K, bro. You think 96,000? Potentially, man. I'm just looking for an easy scalp here. So we'll see. We're going to catch. Look, it's a falling knife. So you don't want to be playing. You don't want to catch a falling knife necessarily, right? I'm trading on a minute to a 15-minute time frame, looking for a little scalps, right? Looking for little ins and outs here. Little ins and outs. That is what we're doing right now. I don't want to be doing anything past that, right? Again, we're jumping in and out here. Big green sailor candlestick coming, potentially. It won't go below 99K. Trust me, bro. Dude, never say never, guys. Hit that like button, by the way, guys. If you appreciate me being live for this long and covering this type of news, guys, all you got to do is, all we ask is hit that like button. Give us a little thumbs up. If you're on Twitter, repost. Repost that bad boy. Hit a repost. Appreciate you guys. All right, let's go to the minute time frame here. Let's lock in. It's time to freaking lock in. You're about to watch a Joshua Jake lock in here, dude. All right. New imbalances. We got a positive above, positive. Oh my God, beautiful. Absolutely beautiful. So our last support region here, it's trying to hold support at that 106 level here. 106, I should say. But look at that sell pressure come in. Massive sell pressure come in. Massive, massive, massive. So let's do. All right. Bleed, baby, bleed. Let's see what else everybody's saying on Twitter here. Link with Swift taking to 1 to 5% when that's supposed to happen. Tariffs, it's just a tool to properly negotiate. Yes, but most liberals don't know that because liberals, they seemingly believe that they're somehow the most educated people on the planet, even though they can't tell the difference between a guy and a girl. But hey, whatever. Whatever, man. Roasted. Powell has stopped speaking after Fed. Dude, Powell has some power, guys. Let's just say that. Powell has the power here. Let's go to Bitcoin. Let's see if we can see anything. Oh, there it is. I was looking for that post. 700 million in longs liquidated from Bitcoin as Federal Reserve. Should the U.S. government build a Bitcoin reserve? We're not allowed to own Bitcoin. We're not seeking a law change. Man, he dropped us hard, dude. Peter Schiff warned us the 100. Peter Schiff's an idiot, man. Whoa. Financial advisor put only 3% net worth in Bitcoin. Crypto guys with 3% in Bitcoin, but 90%, 97% in altcoins, dude. All right, there it is, guys. 100. Here we go. Here we go. We're watching it happen in real time. Watching it happen in real time. What did we tell you guys? 105. Yeah, so 99.6. I don't see any more orders really under 99,000. It's going to be really hard to breach 99K. We could get a sell order. What we want to watch here is a cascade. So we're going to see. If we break on, I'm going to guess there's going to be a pretty big bounce off 100 right here. We're going to fill the orders on 100 to bounce. But if not, you're going to get a flash wick, dude. You're going to get a big old flash wick. And yeah, simple as that, dude. Lock in. Zizon says on Twitter here, man. Man. All right, I can't take a poll because I'm on StreamYard. Let's ask you guys. 1 in chat if you're bearish, 2 in chat if you're bullish. I want to see what happened. What about a nice swing long on Arkham? Nah, I'm not trading Arkham. Arkham's just a spot buy and hold. Arkham's just a spot buy and hold, which I got into early because this dip hit me pretty hard. So I'm down like 15% on it. But I'm literally just holding this bad boy, dude. I'm literally just hodling that. That's just a hodl position. That's me looking at a 2-month horizon and looking to see a $2.50 to $3 Arkham. And if we're at that level, I think we're going to approach all-time highs. So we'll want to watch it. Yeah, that's literally what that is here. Yep, there it is. So we have the new imbalance here at 2. I'm going to be surprised if we don't grab this liquidity. I mean, there's a lot of buy orders there. Prices are not exhausted at that range yet. They are not exhausted. But this is good. Okay? Right? We want to see the volume come in. Now, maybe we get so 100K is going to be some pretty significant support. But I want to watch the sell volume, right? Again, you want to watch the sell volume here. And if we look at this, stochastic reserve, it's 3 minute. No, it hasn't dropped yet. Everybody's bullish, man. Some people bearish, dude. Wait till the turkey day wears off? Potentially. What entry to get into on Ondo right now? Ondo, I think, is always a good entry, dude. Ondo, I mean, dude, I am so biased on it, dude, because we've been calling this thing since 36 cents, chat. So it's a different point. We are up hundreds of thousands, if not 7 figures this market. So we're literally just like, we are all big chilling, right? Some people are like, Josh, you're about to top. It's like, dude, we're literally, I'm sorry that you came into the top of a bull market or, halfway into one. We've been here every single day, the entire bear market accumulating, baby. W's in the chat for anybody that was here this bear market. Actually, yeah, W's in the chat. W's in the chat if you're here in the bear market. You guys deserve all of those wins this cycle, man. So big, dude. Such a big day. Such a big day. Or not big day, but big market, dude. Made history, bro. Look at all the W's. Let's fucking go. See, you guys are the winners. You guys deserve to win. Absolutely deserve it. Wow, I didn't even see that liquidity swing. Whew. It is dangerous out there, chap. It is dangerous out there. It's bloodbath. It's bloody. Some bloody market conditions. Some bloody market conditions out here. Look at that MACD, though. I would like the 3-minute to come over extended one last time. If we could time this perfectly, I mean, look, it's impossible to time things perfectly. It really is. 7 minutes. 5 minutes. Not gonna lie, looks good to me. I just want to see it on the 1 minute. The 1 minute stochastic overextended. I want to get in at that good moments. That good moments. Don't capitulate. But I have to, man. We crashed by 5%. Bitcoin's at $100,000 now. I have to get out. I have to get out now, man. I have to get out. I have to get out now, man. The same bears that were telling me Bitcoin was going to go to 3K that prevented me from buying this entire bull market are telling me that the market's over, bro. I got to get out, man. God, if you guys want to know one thing I hate in life, it's bears, man. It is. It is. They're scum. They're scum. How they have platforms, we'll never know. It just proves that you can be retarded and make it in life. It's the truth there. It's true. Like Mark Cuban, perfect example. Bro's definitely on the spectrum, worth billions. You can hit your head multiple times, still make it. It's very possible. Crypto now before it's too late. They always do that in December to get more stocks in their account. And you know they are leaving the government, so they want to make as much as they can. Politics, yes. Crypto is political. People that are go like, stay away from guys. Crypto is political. It's literally political. We are the most political community on the planet. We want to not only replace the U.S. dollar, we want to change the entire banking system. And you're gonna, don't cover politics. What do you mean? You are politics. You buy Bitcoin, you're political. Yeah, I don't like politics. And you're in crypto. Guess what? You are in politics. You're just, I don't know, you're coping or something. I don't know. My God, guys. Man, I would have liked to see this wick. Man, Foreman may have predicted this, guys. Let me see. Did I get too greedy with the entry point? My God, chat. We missed it. We missed it. Bear trap? This was probably a bear trap, yeah. I would like to see just a sell, man. I want to see a flash wick down. I want to see what just happened here to the downside. We hop in. We shake the little shake bottles, and we celebrate, baby. That's what we're going to do here. I want to celebrate. Celebration time. Come on. You guys know it. You guys know it, dude. You're breathing? Politics. You like food? Politics. You like to eat meat? Politics. You think there's only two genders? Politics. You take showers? Politics. I got nothing else. New Year's rally instead? Possibly, man. Possibly, dude. How do you feel about the Eigenlayer? Eigenlayer is pretty solid, man. I think TJ's a huge Eigenlayer fan here, dude. I think we literally caught the knife at 101K. Possibly, Dustin. Possibly. I would not. Don't get too excited yet. Again, we want to watch that volume, right? That volume ain't too sexy yet. If we miss it, we miss it. Again, we're trading on an FOMC day. So if you catch the bottom of this, you're cracked, man. Get a pat yourself on your back, man. You drive a car, you drive a gas-powered vehicle, politics. You still shop at the mall, politics. Get your chain and H-bar. H-bar is a W, man. H-bar is an absolute W. www. Yeah, what I don't like seeing is this right here. You want to see a negative imbalance. So I'm not again, if we get the flash wick here, we could be also creating a double bottom. If we can create a double bottom, I'm even happier. Get a little W action like this. My favorite, this is my favorite. Just so you guys know. Okay, I'm going to teach you guys something right now. There's 2.2 thousand people watching right now, okay? I'm going to give you guys the number one TA tactic. And I swear to God, okay? I swear to God, this is one of the best tactics. How do I know? Because billionaires like Kim Kardashian developed this. This is their strategy. I swear, this is Kim Kardashian's strategy. You might be going, Josh, what the heck are you talking about? You are dumb as a doorknob. No. Bears are dumb. But Kim K, she's onto something. Let me explain. Okay? I'm going to find them for you. I'm going to find a few answers for you. Chat, why do we like Kim Kardashian? Let me see if anybody knows why we like the Kim Kardashian. Okay? Let me show you. We're going to zoom out. We're going to find a beautiful play here. I want to show here we go. Here's a perfect example. Okay? That's not even I want a better one. I want a juicy here. Oh, this is my favorite. Oh my God. This is juicy right here. Someone goes uneven butt cheeks. No, man. It is the Brazilian butt lift. Okay? The Brazilian butt lift is the most bullish TA trading pattern on the planet. Look, they say you're a boob guy growing up, but you're definitely a butt guy as an adult. And it's because of this right here, guys. A double bottom BBL Brazilian butt lift. I know some people are watching right now. There's the woman out there like, Josh, what are you watching? What are you talking about? This plays out 90% of the time. If you can catch a beautiful double bottom, marry that shit, okay? Lock it in. That's all I'm saying. That is some of the best extensions up. You get that Brazilian butt lift. Look at this. I'm going to just draw it out for you. Draw it out from the top to the bottom, all the way in the Grand Canyon, right? You got to get all the way up in that crack from the top of the, right above the back, okay? You break out of that, look at that upside. It is almost always perfected, okay? Mwah. Perfect there. Look at that. You guys are learning something new every day. Something new every day here on the Discover Crypto channel. Man, we bounced hard off that. Bounced super hard off that. So what are we looking at in the minute time frame? Right? We don't have one here, but you want to watch for it. So if you get a 1 and a 2, right? That is disgusting. That looks saggy. Okay? But you guys catch my drift. It's also a W formation. It's a double bottom. Double bottoms, double tops. Beautiful plays there. Double bottom on XRP right now. Let me see if we got it. Potentially. It's a little uneven. It's a little wobbly, right? It's a little wobbly. I would like to see a little bit more, but yeah, potential. You got some resistance here at 237. Again, guys, I want to see a double bottom first. Dump's not over. Okay. This might be the spring of a Wyckoff redistribution. Maybe, but we'll see. We'll see. Be cautious. Breathe. It's all right out here. Josh is lit. I like it. Look, I knew you guys would like that one. That one's good. There, man. Think about it. That's Granny Poop for me. I'm telling you guys. Next time you see it, you're going to be like, oh my God, Josh. What the heck? What the heck, man? Tell me something about Aerodrome other than the fact that it is one of the most bullish possible plays you can make in the Coinbase ecosystem. Dude, Aerodrome we've been calling for like ever at this point. I don't even know what our entry was anymore. It was well below $1 though. I think it was like literally at like 50, 60 cents. Actually, no, it was below that because I remember when it went to 45 cents. Yep. This is when we were talking about it. Coinbase bought right here. We were like, Coinbase bought, go in. So Aerodrome's up 3 to 4x depending on your entry point on Aerodrome here since we've been covering it on the channel. One of our favorite plays. We have a massive bag. Oh, look at this, guys. What do I see right here? What do I see right there? You see what I'm saying? You got to look for the double bottoms. You got to look for those double bottoms. If you could catch those double bottoms, you're making massive money in these cycles here, guys. So, Aerodrome at $1.73, it's getting a nice little retest. Personally, I'm not picking up until I see it go to like $1.40, $1.50. But it could be a very good entry point. But I just have a bag of Aerodrome. So that's just personally on me. I have a bag of it. Ondo, I think, is an easy play. Here. Let's see if Morph got its ass kicked yet. Because Morph, little hidden gem here, guys. Morpho here. Back to $2.83. Another little beautiful play. Let's see what Pin's at here. Pin link here. New friend of the channel here, guys. I got some big announcements coming out with them here pretty soon. $1.80 here. Looks like $1.80 here. or so $2.80. $2.80. I think this is going to be a dominating play here this cycle as well. It's like a $300 million market cap token, little hidden gem there for you guys. I also think they just had a huge update. They're doing buybacks. Let me go here. Let's actually pull them up. Them and Arculus, guys. Make sure you guys are checking them out consistently here. But Pinlink AI, first RWA tokenized DePIN platform. They're going to be they're literally tokenizing all your decentralized physical infrastructure. So they have over $3 million in mining operations. They're going to be doing a $100,000 buyback and staking rewards program. So lots of buying pressure and, of course, exchange listings coming up with this product. They're not even out on an exchange yet. So very excited for that as well. But, yeah, there's a lot of opportunity, guys. There's a lot of opportunity out there. I mean, if we get this pullback here, look, I'm just saying, a lot of you are brand new to this channel. You want to be creating a strategic, fundamental portfolio. It's where you start dollar cost at. Where's my trading view? Where's my trading view? Trading view gone? I'm like jumping back and forth here. Here we go. So, yeah, I mean, dude, Aerodrome, look at this. 9%. Arkham, 10% discount. XRP, 10% discount. What is this? ICP. I'm not even a fan of ICP. 10% discount. Doge, 10% discount. Pepe, 12%, right? There's a lot of better opportunity coming up here than we were just at 2 days ago. You know? So here you go. We're getting that double bottom potentially on Bitcoin right now. 21 million is not enough for even one person. Come on, man. True. True. There it is. There's my little sweet rose sell off there. What about Render? Absolutely Render. Render, another beautiful play here. $7.88. Yeah, look, it did lose that support. So we want to find it at that next level. So $6.72 is an extreme discount on Render. If it goes down to that range, I am putting a bag into when we put a bag into Render, dude. Probably like I'll put a bag into Render. Dude. Yeah, here we go. Let's get that sell off, baby. Sell off, man. Dump it. Dump it. A dumpy dump. Let's see if we can get it. Let's see if it happens. Stochastic, overextended. Stochastic, 3 minute. Let's see. I want to see a huge sell. Man, this volatility is intense, man. Brett, I'm not the biggest. The only meme coin I care about is Duke, guys. And they're launching on Solana here soon with a massive update. They have an insane marketing team and community takeover. It's going to be so bullish, dude. That's the only meme coin I am a part of. But I like meme coins. I love meme coins. But that's also because we're trying to build the next era of meme coins with OmniSwap. So we're trying to prove that influencers need to stop launching influencer tokens and create community tokens. It's about building a community. Volume is decreasing. They noticed it. Chris, look at you, Chris. Let's shout out Chris right here. Shout out to Chris here. Watching the right things, man. Just got 20 more Tesla options. I pray it corrects itself. Tesla? Is Tesla up today? I haven't even checked their stock, to be honest. Almost everything is bleeding right now. Moment of truth here is on Bitcoin. Is if it can hold that level or not. So, yeah, I'd like to see this fill. Again, I want to see that flash wick. We want to see that flash wick here. Look at this. Let's reload this. Oh, my God. Oh, my God. I told you guys. Look at that. Look at that giant. My goodness, dude. Someone max bid. 99.8, dude. I think we're going to get a flash wick below $100,000, guys. I do. I think we're going to get a flash wick. We're going to get a little flash wick. Maybe get a little trade here and enjoy ourselves here. How do you feel about ICP? I think ICP could do like a 3 to 4x this cycle. But ultimately, I'm not the biggest ICP fan due to just being. Look, I've had bad experiences with their marketing teams in the past. I've never been paid by them. I've never been sponsored by them or anything. But I've just seen the wrong things taking place, the wrong things happen at their events, and so their tech's great. Nothing against Dominic. I think there's a lot of opportunity that can exist over there. But they did also have the issue with FTX manipulating the token price early on. So a lot of problems that just accrued over there. But in terms of partnerships, I think it's beautiful. Any product that's partnering or building with them, there's a lot of opportunity there. So again, I think you could see a 3 to 4x over there, no problem on that price action. The dips are where champions are born. Yes. ICP's team dumped hard. I don't know if it was ICP or if it was FTX. I don't know. I don't remember that completely. Joshua Perks, this great live content, dude. Anytime, man. Appreciate you, dog. Low cap DeFi gem. Oh my god. Let's see. Oh my god. Look at VIX. I can actually pull that up right here. Let's go to the VIX. VIX. Where is my VIX? Where is my SIBO? My placebo. Oh my oh, yo. My god. Oh my god. Jeez, my man. So if you guys don't know, VIX is opposite. So we're actually right. Yeah. I mean, private. Dude. I mean, if it peaked around these levels previously, that's good. I mean, again, I think you're looking at some opportunity here. Oh my god, dude, the SPX just, what is this sell-off day, dude? What is that? Oh my, ouch. 3% in a given day. Ouch, my man. Ouch. Some people they're gonna scream from the rooftops that this market's over, guys. It's popped. The bubble has popped. That's definitely what's happening right now. Just like that. They sound just like that too. That's how bears sound like. What to do? All right, here we go, guys. Let's see it. I want to grab this thing. I want to make an incredible trade with you guys live here. That would be beautiful. Try to get a little $10,000 trade here. Would love it. Could use that. We're going to either have a Merry Christmas or live in poverty. Well, thankfully, I already bought all my presents, okay? Thankfully, I already bought them, dude. Double bottom on Jupiter. Let's see if Jupiter's got that Kim K action here. It does not. A double bottom would be down here, brother. I mean, potentially. But that's not quite the double bottom we're looking for. Not quite. Right. Again, what we're going to be targeting here, $100,000. Right here. Right here. Come on, give us that W. Get us that double bottom. Look at that volume sell off. Because your worry here, chat, your worry here isn't, again, the worry here is that if there's a big sell order that comes through, market makers could cascade those liquidations, okay? We're trading market makers. Market makers always win. Retailers are stupid, right? So 99.8, that's going to get wiped. You see this trader right here? You see this lone wolf right here, this giant candlestick? They're going to get eaten. Market makers are going to eat them. They're going to eat them like you're 8 years old and it's your happy birthday cake, dude. This is a birthday cake to them. They're going to eat that and they're going to ping pong it back. There's a very high chance they're about to eat them. I'm just saying, right? That's what you want to watch. Signals is now broken. Awesome. Love to see it when Signals is broken. That's awesome. That's fucking great. There we go. 100K Bitcoin, rebuying on Bitcoin. So what you're watching right now, guys, okay? And by the way, hit that like button if you guys appreciate us being live this long. We've been live for like an hour and a half, if not 2 hours at this point. I am simply opening up a scalp trade. So you're going to watch me open and close this more or less live. If I don't close it live, it means I'm going to close it in a Telegram chat. If you're not in our Telegram channel, well, you're just missing out on gains. We had a great trade yesterday alone with Chainlink. Like, type 1 in chat if you were in the Chainlink trade. I know a lot of you were in that Chainlink trade. So really big plays there. Brian asked in the Telegram chat, is this a double bottom on Ondo? Guys, nothing's going to double bottom until Bitcoin double bottoms. Okay. So the double bottom, right? This doesn't look like a beautiful double bottom either. This more looks like you'd get a sell off to like 176 or something. But I mean, so you do have it here. So look at this. You're seeing a double bottom on the stochastic, right? That's usually pretty good to see as well. So right now, the entire market's relying on Bitcoin. So what we want to see, you want to see a double bottom, right? I would like to see the RSI come over extended one more time. but look for the double bottom of the stochastic. Look for a double bottom of the price action. And then we grab that trade up to that previous liquidity grab of $102,000. That's going to be our first target. Okay. That is going to be our first target. That is where the biggest imbalance is going to be here on the shorter time frame. 1026, 1026.64 here. But more importantly, on FOMO mode, you're looking at, of course, the liquidation level being absorbed on the heat map. So your heat map's your best friend. Look at that. 1026, 1029, and 10228. So they've actually changed just a little bit here. But you do have that liquidity below us. So potential liquidation grab here from a big market maker. A market maker is going to want to fill this imbalance, more than likely grab this order book at 100,000. There's a lot of orders at $100,000. So you get a nice spike followed by a quick little windshield wiper. This is the windshield wiper method. You guys know this. If we go to high block capital and we pull up, of course, the delta spread here. Let me see. Your session has logged me out. That's awesome. Let's go ahead and log in here. Switch to old version. Go to our liquidation levels. If you're looking at the delta spread here, okay. If we're looking at the delta spread here, there it is. Look at that. Absolutely eaten. So there's no more bulls left, right? So now we're looking at a delta spread of -5. Oh my God, it's massive. So -$20 billion is our max liquidity here right now. Watch this. Watch this. We're playing 3D chess here, okay? This doesn't work every time, but you guys have seen me done this 100 times. -$15 billion. So you got some liquidity down to 99.8. It's this last little gap here, okay? People are too bullish right now. There's way too many orders opening up at this little price level, and market makers are way smarter than retail because there's AI algorithms telling these market makers, hey, if you dump $1.2 million of a Bitcoin and you wipe that exchange level out, you're going to make $400,000 in trade exchange volume, right? They're going to make a ton of fucking money off liquidating these levels. What you are noticing, though, is the stack of now short positions opening up. So you get a windshield wiper method. The dot line here, this dotted line, that's your windshield wiper method. What that looks like in a little bit cleaner of a version is on FOMO.io. Again, this is your windshield wiper. It goes back and forth. Wish, wash, wish, wash, wish, wash. And when you see, look at all that. Look at all that. You see at the bottom of the screen there, all of that blue stacking up. There's a bunch of orders coming in because there's people out there that think they're going to outsmart the market makers, and they're piling into long positions. And if the price comes down to that range, they get liquidated. These are people doing 25, 50, 100x leverage, right? So I don't want to enter right now because that is, it's unconfirmed, right? It's not the best entry point here. It almost is. And maybe it does bounce from here because a huge buy order, we can't predict that. But what I want to see to be comfortable on making an entry point is I want to see this wiped out, this eaten up. I want to see a double bottom on the stochastic, which again does look like we're about to see here. Could be about to see it here. I just think there's going to be, personally, I don't know if this is going to be a double. I don't think this is going to be a double bottom. I think that I would like to see that, but you might get something like this where it rebounds off. You create a little bit of a bull flag and then it breaks out, right? Like you could also, that's possible as well, right? That I'm not a pattern trader though. I'm just telling you guys my favorite pattern is the double bottom BBL. It's the Brazilian butt lift. It's the Kim K tush kush right there, right? That's it's also the best type of strain of Mary Jane, if you know what I'm talking about. No idea what I'm talking about, actually. I'm just ranting now, just babbling on and just blah, blah, blah. You know, I'm gone. I'm just gone. $108,000 though, $100,800. Again, I want to see this filled right here. Simple as that. Simple as that. We'll hop in and enjoy this here. NVIDIA tanking now. Yeah, I mean, it makes sense. Now massively overextended. People are just getting very, very bearish. We're also market closes. So, you know, there's that. So, market is is closed. The market is closed. Closed 11 minutes ago. So, yeah, I mean, there's that for you guys. Huge buying volume. So, yeah, I think people just that was probably overreaction, guys. Probably overreaction there. Oh my goodness. This better not turn into a double bottom. If this turns into a double bottom, sweet Billie Jean, dude, I'm going to be mad, dude. I'm going to be mad. I am literally the doctor. I've been given the plastic surgery. I've been breaking it down. Dude, it would be crazy. Only time Kim K remotely sounds attractive is when you mentioned her just now. Hey, it's the way you talk about it. It's the way you word it. Josh, can you reiterate why this dump is going on, please? Simply because of market uncertainty, man. That is all it is. Overreaction. Cup and handle is goated. Also another good one. Yes. Yes, but I'm a man, so I don't use handles. I just grab a cup by its base, dude. I'm a man. We don't need that teacup shit. I'm just market will open strong tomorrow. I agree, man. I completely agree. They know you're watching heat map. Probably. They're like, that's what we're building here. So by the way, we have a new product integration coming soon. So you're going to have a similar footnote map like this, just without all of the, it's going to be a way more basic way to read it and understand it. And you'll have all those products there. You'll have all those products there for you guys. Yeah, I'm going to be mad if this plays out, dude. I don't think it will, though. Let me see. What's the 3-minute look like? No. Give me that flash wick. But we do see, you see the volume, guys? You see the volume? That's what you want to see. It means the selling pressure is dying. So, but if we miss it, we miss it. It's FOMC day. You don't want to be absolutely crazy. I would like to see, let's see the minute. Just give us one little juicy wick down, dude. Come on, baby. Come on. I know. Market makers. Come on. Do your job. 15-minute look. Yeah, 5:15 are looking really good. It does look, it could be double bottoming right now. It very well could. Look at Ondo, dude. Ondo is so sexy, man. Ondo condo, baby. Ondo condo. Anacondo. My anaconda don't. My anaconda don't. My anaconda don't want none unless you got buns, hon. Is that how that goes? I don't know. Goes that way now. Absolutely goes that way now. Let's see what else we got here. Though. In terms of Solana 208, man, huge rebound. Look at that MACD. Yeah, there's going to be a big jump here probably. I just want to see that flash wick. Come on, baby. Give me that flash wick. FOMO here. Let's go to our high block. Reload. Zoom in. FOMO does it once again, which, by the way, guys, if you don't use FOMO.io, it is free for your news. It's the #1 crypto news app on the planet. If you don't use FOMO.io for your news, look, it's cool. Sometimes, I have family that you're very far off on a spectrum. That's all I'm going to say there. But guys, it has all of your crypto in one place. So it doesn't matter what crypto you're trying to get news for. It could be Penguin. Look at this. We already have Pudgy Penguins on here. If you need Pudgy Penguin information, it's going to have the Pudgy Penguin news for you guys. If you want Tron, if you want Cardano, if you want any single crypto that is like in the top 500, we have it integrated here for you guys all in one place. So Pith Network, all of your favorite tokens, guys. And you can even sort it by rising. You can sort it by hot, right? Hot and heavy. You can sort it by bearish. You can sort it by important. There is no bearish news apparently on Pith Network. But of course, all your latest news in one place, all for you guys here. And again, you can even search it. You can search up whatever you guys would like. That is FOMO.io.news. And of course, guys, it has our products for the $9.99 version. If you guys do want access to our dashboard services and our fear and greed index map, which is beautiful. So make sure you guys are voting on this daily too. It looks like our community is more bullish than bearish right now. Still stacking up the liquidation here at $100,000. Look, guys, I'm just going to say it as it is. I'm going to say it as it is. I don't think this is a double bottom. I said it. Okay. I fucking said it. Is it going to make you mad? Maybe. But I would like to see a wick down, man. Lost a bunch today, but up 5x on Tima in the last 48 hours. Guys, I'm not pulling up Tima chart again. It's literally, I don't even know is it a meme coin? It's brand new. So that thing is just skyrocketing right now, man. It's on its own. It's high risk. No data there's no TA to do on it. There's not enough technicals to give an analysis on it, unfortunately, man. Sorry about that. You need months, bro. Yo, dude, not sure if it is because you're so close to the mic or if it's the shit speakers, but there's a sharp noise when you shout. It might be just because I'm loud, dude. I don't know if you noticed this, but my mouth is about as big as my eyebrows. So I'll move the mic away from me. If that helps, let me know. Here, I'll move it all the way over here. All the way down south, man. Thoughts on Sui? There you go. Let's pull it up, dude. SWE USDT, man. Type 1 in chat if you hold SWE. How many of you are SWE guys? Okay. How many of you guys are SWE guys? I'm very curious here. Why is the USDT not popping up in the Trading Bear? SWE Bitcoin, SWE USDT. Here we go. SWE's at $4.44. Man, we got a ton since 20 cents. My guy is rich, dude. Lobster dinner on you tonight, man. Huge liquidity grab on SWE here down to 420. Yeah, SWE, man, is by far like the next Solana. It's definitely like a top smart contract protocol. Great devs. They've been incredibly innovative. I got the opportunity to actually see them in Abu Dhabi just last week. I was in Dubai. I was in the Middle East. I was in the sand dunes. You guys saw me. Absolutely fun time. Absolute blessing. But I missed out on SWE. So in terms of what can it do, I have no idea, man. SWE continues to crush it and blow people's expectations out of the water. So I faded it at $2. I faded it at 67 cents, and I'm going to fade it again at $4.40. Because SWE is nothing but a goddamn king, bro. It is a goddamn king. It is a king of, it is the Polygon-matic of this cycle. SWE getting mass upgrade soon? Yeah, they just crush it and crush it and crush it and crush it and crush it, man. That's all they do, man. SWE only wins. SWE literally only wins. Do not fade the SWE. Do not fade the SWE. Volume is starting to look good, though, here, guys. Although, I don't like the way that stochastic is looking. People are shorting insanely hard. Yeah. I would like, if we can catch the flash wick, guys, I'm going to celebrate here. But if we don't, we don't. Partner with Phantom, absolute W. Rose, I don't know enough about. I do know there's some big updates coming to Oasis soon, though. But I got to keep that hush-hush. Matt SWE had an awesome Spaces this. Yeah, they all do. They're a fantastic team, man. They're a fantastic team out there. Double Lube, Cindy Luhu. We shall see. Thoughts on Hedera? Hedera is phenomenal, man. In terms of, they're looking to get into tokenization as well. They have a lot of government affiliations. So Hedera with their council, I think, is set up for a decent amount of success. I can actually pull up HBAR. Let's pull it up on the charts here, right? So Hedera hash graph is 28 cents. I think this can go back to previous all-time highs. I mean, it could be actually forming a pretty significant bull flag here. But yeah, man, I'm not expecting much past a 70-cent Hedera this run, though. It's about a 2 to 3x from where it's at today. So 75, 80 cent Hedera, I think is very, very possible. I think $1 is going to be very psychological, but hey, dude, anything's possible. If this market rips to 150K Bitcoin, $1 plus on Hedera is very, very possible. Very, very possible. But I have been in Hedera since 3 pennies. 3 pennies. So I still have it. It's on my Exodus wallet. It's never been sold. I've been holding it for 3 years and 11 months. 3 years and 11 months. So shout out to the H Barbarians and the OG Barbarians out there that have been hodling with me all the way through this, man. Tell me you think VXV still has a shot here? No idea, man. I haven't followed VXV in a while. I do like their company, though, and their product. But 54 cents, we sold literally all of our AI, brother, at the top of the market. Literally at the exact top. So it was at about $2 when we sold everything. I sold all my AI. Everybody knows it. At March 17th, 2024, we sold literally all of our AI crypto and made hundreds of thousands of dollars and made one of the best possible fucking trades this entire market, man. So right now, I think VXV as an AI play could very well. I think there's going to be another AI bubble like this. I think there's going to be another AI boom. So I think Near, Render, of course, VXV, but your Chlor AI. I think all of these products are going to pump again and see, you know, I think there's going to be another AI boom. I just feel it coming. I don't know if it's this. I don't know if it's Q1 this year. I don't know if it's Q4 this year. But with Sora launching, I predicted it. I said it was going to launch. It was going to crash the network, and they're going to need a heavy amount of infrastructure and DPIN created to support this next wave of artificial intelligence. And I think it's going to create a whole nother legitimate boom with quantum and everything as well. So very bullish on AI, man. But in the sense of, is it going to move soon? Really, I don't necessarily know. Because again, yeah, it's too hard to tell here. But Render, look at that. Perfect resistance here. So I think it's going to come back, man. I don't know necessarily when. I think it's going to be sometime in 2025, though. Wow. BioVitality, $50 super chat, man. Appreciate you, bro. The markets are bleeding and Tima is good. Okay, we're going to pull up Tima here, guys, but there's no TA to do on it. You guys want me to do TA on Tima here, man? And it's literally like 2 weeks old. It's like 2 weeks old, you know? So I don't know what this, let me go to CoinGecko. Let's pull it up. Let's see what this is. Is this a meme coin? I swear to God, if it's a meme coin, it's just a meme coin. Literally just a meme coin. So shout out to you, man. Thank you for the $50 super chat. But at a $31 million market cap, this is incredibly high risk. This is a high risk meme coin. That's all it is. It's just a high risk meme coin. So hopefully it goes to the moon for you guys. That's all there is to it. But all right, guys, I don't think this is going to play out here, so I'm going to set a limit order here. If you guys want to follow alongside my trade here, guys, come join the Telegram here. It's completely free to join. I put all my calls in here. You can see I made over $1,000 in one trade last night. In fact, it was actually worth over $2,000 at one point. We ended up adjusting our stop loss, closing out for like $1,250. So beautiful play there last night. 46 different people followed along with it. Of course, go join CoinW, get involved. The link is in the description. And shout out again to today's sponsors and our partners over at Pinlink that are just building one of the best DPIN projects that I have ever seen. The first tokenization of real-world assets, being able to tokenize DPIN platforms is going to be incredibly powerful as we have a mass demand come for these physical infrastructure networks. There's going to be a whole new way to create new revenue streams for all DPIN asset owners. So all of your data centers, all of your mining centers, everything, guys, are going to be utilizing these tokenization systems, and it's just going to make it better and stronger and faster for anybody involved here. More income, more use case, more DeFi access, all through these smart contract projects. And then, of course, guys, shout out to Arculus. You guys haven't already, go get your cold storage wallet, guys. One tap total security. If you guys don't have an Arculus wallet or your crypto on cold storage, you're going to get wrecked. Okay, you guys were here through Celsius, you were here through FTX, you were here through all the different exchange and bank collapses. There is always going to be more. Every bull market has a bear market. We can't predict the top and we can't predict the bottom. But what we know is we can keep ourselves secure and safe by simply getting your crypto off exchanges today using code DC20 in the description below and picking yourself up an Arculus card today, guys. Go do so. It takes 60 seconds to set up. And by far, guys, the most sexiest hardware wallet on the planet, guys. Thank you for being here. I will see you guys tomorrow. Go join the Telegram chat. Do not miss out on the Telegram chat. That's all I'm going to say. And I'll put out some trading calls in there if our targets end up hitting. Peace out, guys.